weekend all. Ira Epstein with your weekend edition of your financial market wrap-up, and this is for Friday, the 2nd of August, and what a week. Crazy. We're still at 315, 316, but this will be where the settlement prices came in, and the only good news I could say is the markets are well off their lows, but still another down day. And obviously what rocked the market this week was primarily, I think, now that the new 10% tariffs go into place on the $300 billion worth of goods that haven't been tariffed on China exports to the United States, seeing the Fed have to do a quarter-point cut, and I think the market has now taken the Fed, and it's telling the Fed, we're not waiting for you. We're moving you to where the marketplace is. So be cautious of that, but that could be where we're headed. And as I mentioned yesterday, a lot of traders, when I go down to the floor and I see all the traders, they're talking, the 175 level potential in the 10-year note. Don't know if they'll get it or not. The gold market moving very nicely to the upside as traders are buying safe havens. They're not only buying treasuries and gold, but if you look at the yen, they've been buying the yen. Traditional safe haven movement in the market. And the dollar down a bit today. So let's go to these charts and remember what we do on the end of the week charts. When we do this monthly edition, we start off with one monthly chart. And it just gives us an idea of the bigger picture, and then everything else is going to be weekly charts versus what I do during the week on dailies. So you still have the pattern of higher lows, higher highs. You still have good upside buys. You're over the 18-month moving average of closes, which comes in, let's call it the 2789.75 level. From where you're at, still about another 150 points lower. On the weekly chart, support comes in closer in the market. It comes in closer to the 29.19 level. As you can see, this market stepped out of the pattern that it had of higher lows, and this is just a close-only chart, and higher highs. So that's important. You did that, and you broke through that when you took out this low right here, which was 29.6950. That puts into play the potential, doesn't mean it has to go there, of challenging support at that 18-week moving average of closes. When we come to the the weekly chart, and this is, each bar represents 1 week of trading, you've got a pattern and have had a pattern of a lower low and a higher high. I look at this way. If the market doesn't take out 27.2875, the odds are you're going to form a swing line low that is higher than this one. You've already got the higher high. Where might that all come in? I'm going to guess the 18-week moving average, 29.19. Guess what today you went to? 29.13.5. You held it. You finished off at the 29.31 level. So I think other traders are looking at what I am in key moving averages and saying, okay, maybe the market corrected enough and that's it. If it all gives ground, one other potential could be, again, tying together that 27.28 on that other chart, the 27.50 level in the 100-week average, and the Bollinger Band, which comes in at 27.90. So that could be another level of support. By the way, in order to turn the swing line up at this point, you'd either have to take out 28.2950 or not take out this low and have an inside week next week. That's just how the indicator will work. I know because I wrote the indicator. In terms of momentum, it's starting to point down. You can see when it opens up on Sunday, if the market doesn't gap sharply higher, the odds favor that the red line will get under 80. There's no magic there because unlike the daily charts where you get embedded readings, I don't believe that's what really occurs on the weekly chart. The chart in this case either pointing up, going sideways where it's already got a trend in place, or turns down. It seems to be it's fluctuating, trying to turn down right here. When I look at the NASDAQ made a run, didn't quite get to that upper Bollinger Band. And remember, the theory of these black lines is that the market will trade within them 95% of the time. They're called Bollinger Bands, and it's an algorithm designed to do that. That's not 100% of the time. You want the market to be able to get through it on the upside or downside. It's important to what that indicator can do. If you look here, just like in the S&P, the market is trying to turn the momentum to the downside. If you look here, you've done it in the Dow. So you've lost that momentum that was going sideways. Now the K line, the red line is what it's called, is already under 80. No magic there, but what is the magic? Well, you're falling back to the 18-week average, falling to the 18-week average of closes, falling to the 18-week average of closes, and all of the markets, at least for the moment, have stalled out in their break at that point. Again, down here I see big support, 25,205 to 25,017. That doesn't mean you're going there. Doesn't mean you're not going there. It's another support level, and now you've pulled back from that thrust to the upside in a corrective mode. In the Russell, how many times do you have to hit the combination of the 100-week and the 18-week, and you get to see that that's what the market's pivoting itself against. Now, the difference here is you had a big outside week down. So this thrust to the upside was all taken out of the market. Momentum is slightly turning down. The bias is down. Resistance now, that 1557, the 1559 level, and you'd have to take out 1628 in order to tell traders that, okay, it's a bear trap, and then you put into play the upper Bollinger Band. My theory, at least, is when you get an outside day or an outside week down, if you take out the high of that the following week or the week after that, so that's 2 weeks it's got, then it's what I call a bear trap. And in that, the market might make a run for the upper Bollinger Band. Some will also say, well, Ira, what if it falls down first? That'd be great. What can I tell you? I'm just telling you how that would work over the next 2-week period. In the VIX, on the weekly chart, you're challenging the upper Bollinger Band, but you haven't gone anywhere yet on it. Still caught in this sideways pattern. Certainly the market was up for the week, but when you consider the week as a whole, 5 points up in the VIX, okay. I mean, it's not that it's not a lot because you just came from 14.5, but you're still being held back by the upper Bollinger Band at 18.5. So if the market starts breaking out to the upside, maybe that's sending a story that stocks are going to go a bit lower. I don't have that yet to make a decision on, but here's what we do have. Higher lows, higher highs, uptrend, momentum up, bias up. You did hit the first price target of the upper Bollinger Band, and in the past when you've hit it, the market has failed at that number. In the note market, momentum locked in, still pointing to the upside as I call it, higher lows, higher highs. It's the flip-flop here. What I don't want to see over the next week to 2 weeks is taking out this week's low. What's the upside potential? Doesn't mean it has to go, but a logical number is the upper Bollinger Band at 129.19. Now, as it keeps climbing like it's been doing, it forces the Bollinger Band higher with it, so it'll probably be a bit higher than that by the time we enter Sunday's trading. In TLT, now this is the popular ETF for interest rates, lower low, higher high, making its challenge here. And if you look, momentum had started to correct to the downside 2 weeks ago. It continued to a degree last week, and then when the market saw the Fed action and what the new tariffs from President Trump, it just soared late in the week, up quite a bit, 5 points. That's a big rally in that market, and it keeps the bias in place that's up, it keeps the trend up, but it doesn't keep the swing line up. The swing line still got a lower and low, higher high. It wasn't the trend that I meant. We see that. It's the bias and momentum that is pointing to the upside. Now we get to the dollar index, and regardless, people will come to me often, and I talk to a lot of people, and they'll say to me, okay, Ira, take the name off the chart. And I would say, okay, first time you hit a Bollinger Band, I'm looking for some resistance. Same thing on the downside. So with all the news this week, you did get up to that number, 98.37.5, and you're finishing out towards 97.88. Does not mean the trend is over. But to get something bigger going right now, as much as the dollar is up, it's still caught in this sideways action, trying to break out to the upside, and that's all that I can say. The trend up, the bias up because you're over the 18-week average. Hit your target. You haven't hit that target from the upside since back here about 6 weeks ago. Back to it, and we've been there before, and it's stalled each time. We'll see if the market can break out or if it's going to stall again. In the euro, flip-flop of it. Look at how many times you've hit on the weekly chart the Bollinger Band bottom, and you've bounced. That doesn't mean that the overall pattern hasn't been falling. It has. I'm just saying that when you get to these two extremes, the market has a way of bouncing the other way, and I wouldn't be surprised to see that happen again. The Mexican peso has been stuck in no man's land since the middle of March. It just keeps hanging at this 18-week average of closes. It gets thrown back each time from the 100-day. It's not really going to the Bollinger Band. So I think what you've got here is a market that's looking at world trade, wants a deal with America, hasn't had it yet, could get a benefit with all these things going on in China. If they get some plants put there, they certainly have relatively cheaper labor than we do here in America. But we'll see what goes on. Right now, what's the market doing? It got up this week, made a higher high, then a big down move. It's put into play the potential for the lower Bollinger Band because momentum turned down and bias is down. Resistance now, the combination of the 100-day average and the 18. I'll repeat what I said. When you get an outside week, now if I take out this week's high next week or the week after, it puts into play the potential at least to run back to that upper Bollinger Band. In the Canadian dollar, corrective mode, sort of like what we're seeing in the peso here, with a higher high, lower low coming into play for that 18-week average of close. It's been a crazy week in currencies, there's no question about it. And here's been the stellar performer. And you can't tell me it's because they've got great interest rates. You can't possibly tell me it's because their economy is doing better than ours. It's a safe haven play because people aren't certain what's going on in world trade. That's my instinct. You came down to a low this week of 91.76.5. Let me show you. Here's how the trade looked. You had lower highs. If you took out this low, you have a lower low in place. Puts in maybe you get to the 18 or the 100-day average of closes. You come down, you hit 91.76.5, and for whatever reason, it holds that 18-week average and spurts itself back up. So I think there's great importance to a lot of these numbers, and I'm always looking at them. Bitcoin, well, it's a safe haven play. Again, traders started buying it. I'm not saying it's good or bad, but it seems to go like that. The market up $800 for the week. It had its correction. It lost on the daily charts an embedded reading. You look on the daily where it went, and we were talking about that. And then when it lost the embedded reading, it again moved. This whole correction has stayed over on the weekly chart, the 18-week average. So, and now, by the way, it's changed itself. It's back into a bull trend unless this week's low is taken out next week or the week after, and that puts into play then the potential for the 18-week average. Crude oil. Need I tell you what's going on here? This is the differential between Brent and WTI, and it just keeps sinking in. And I think I mentioned about 3 weeks ago, excuse me, that the IEA was thinking that that differential was too wide at these numbers. They were right on the money. In looking at where we're at in chart action, still bearish. Lower highs, lower lows, momentum down, bias down. Pretty strong resistance, 67 to 67.90 in the Brent crude. The WTI crude stalled out right at that 18-week average. Now you've got an outside week down. If the market decides to continue to the downside, the 51.40 area is important. If you were to take out this week's high next week or the week after, that would be taking out the high of an outside week down. Because it's right against the 18-week, I guess the 100-week average would become a potential next target. Rebob gasoline into a downtrend. Lower highs, lower lows. Will it get to the lower Bollinger Band? Each time it's tried it recently, it failed. It took this type of move, but that was accompanied when momentum had locked in already. You don't have that quite here. So that's the question I have, is it coming down there? What bothers me is we're coming to the end of the summer driving season, and what do you do with these markets? That becomes the interesting question. And the same is true of distillates, which is what heating oil is. Lower highs, lower lows, bearish action, holding the resistance, that line in the sand, as I like to call it. So you look at it all together, you can see stocks have reopened. It's after 3:30, and they're even bouncing a little bit more. So not that big downside traction. But it is a Friday. You're not quite certain what that means. I want to remind you what I do. Early in the morning at 6 a.m., that's Central Time, I start a recording where I cover 40 charts of futures, 5 of ETFs. And the idea there is to give you what I'm seeing in the market to start your trading day off before major U.S. government reports come out, before some of the option markets open up. Everything's electronic, but not so. You know that the markets trade in different time hours. You don't open the cash market in the Dow for another, till 8:30. So that gives you an idea. And as I said, I cover these markets and I do them in a very certain way. The charts will look different than you see here, and I'm not in them. I've got my headset on, and I'm able to say, buy here, sell there, put a stop here. I'm wrong. I'm right. This is what I'm seeing going on. Very different than I'm doing here. Will I be wrong? It's a guarantee. Will I be right? Luckily, yes. So it goes both ways. I balance that statement very carefully. I'm like Swiss cheese. I've been around so long and I'm so used to, God, I did that? How could I have done that? Or boy, did I get that one. It goes both ways. This is the exact sequence that I cover in. So let's assume that you're one of these traders and you're not interested in the stock indices and others. You want the metals. I don't want to waste your time. You grab the scroll bar and you just pull it. It'll light up and it's going to say metals or whatever section you're on. There'll also be a lexicon right here. So with all the work I'm putting in, what's the idea there? To help my confidence, your confidence, to review a chart, to see what's going on. I don't do this for free at that hour. You can imagine that. It's a lot of work, and I'm up early reading about Asia and so on. I charge, outrageous, 26 cents a day approximately for your first 30 days. And it's 30 days at a time, not a month at a time, every 30. You can drop out whenever you want. If you decide to stay, you have two choices. You can either go to the $15 every 30 days, or you can decide you want a discount for a full year, which is 360 days, and it's $13 or $156. Your call. So how do you do this? How do you find out more? Go to our website. Under the keyword education or research, Ira's morning subscriber video, away you go, and you can click right up here if you'd want. It'll take you there as well. I'm Ira Epstein. You have a great weekend.